Good morning, guys. Welcome to Trading Day, the 18th of May, 2020. This is Ikkura Challenge, race to 100K, and we're going to see if any of us are closer to the 100K mark today. It was crazy trading day. Like, the market shot up more than I even thought possible. So how did that affect you? I'm so curious what your positions are, how it affected you, what your net worth is.
Yeah, I haven't seen it all. I took a look last night. I placed one order. I don't know whether it got fulfilled. But I think that today would have been an insane day for me if I didn't hold on to Zoom. So Zoom went down nearly 6%. So that's going to temper the gains, compare any gains that I got from the other ones. But it doesn't matter because the other, like, even though it may not make for exciting, like, oh wow, it went up XYZ, like, you have this time element as well. So Zoom, it went down today, but my expiry is like another 4 months.
Yeah.
Kind of. Yeah, like 3 months. So, but we'll see. Let's open it up. My prediction, so I ended last week at 6.6, okay? I don't think I'm above 7,000. I think I'm like 6.8, 6.9.
Okay.
I think Zoom wiped out the gains that I got from the other ones.
Right.
But let's see. Are you ready?
I'm so ready.
Oh, hello. It looks like my gains overpowered Zoom by a lot.
Really?
I am at 7.595.
Wow. You're up like almost $1,000. That's amazing.
Holy moly.
Some of your calls must be worth so much right now.
Zoom went down $750 and I'm still up.
So you the rest of your portfolio went up almost $1,600.
Hello.
Wow. What is the winner there? Like, what is the one that wins? Can we go through your...
Would you like to see a screenshot?
Yes. Please send it to me. Can I see your moves as well?
I didn't make any moves. I tried to sell my Walmart call, but I didn't get the price that I wanted.
Hello, JD. Very nice to hold on to you.
Oh, JD.
And Alibaba, wow. Incredible. Very, very nice.
I'm going to sell that today. Oh, no, actually, no. It's due Friday. Anyway, I don't have much to say except that. Thank you. Thank you very much. I'm very happy right now.
I'm so excited for you. You did really well.
Yeah. Nothing to say.
Except if you could take some of these gains and wait for Zoom to come back, you're going to be sitting at like above the 8K mark.
So fingers crossed. I was just thinking, I won't dive into it too much right now, but I was just thinking that in terms of like my portfolio sort of like weighting allocation right now, I am going to try to aim for like a 70-20-10 split, or like 10% cash. 10% cash is really low, but like 10% cash, 20% puts, 70% calls. And then I'll probably just like re-weight it. I think I listened to a sorry, I'm digressing, but I listened to a podcast the other day. This is like a couple months ago actually, about ETFs and how ETFs is actually very passive trading for the consumer. But people running the ETF, it is extremely active because they're constantly buying and selling and reallocating and making sure that, they get this like weighting of stocks and I mean, like, I guess they're constantly re-weighting their holdings. And so I think that maybe I'm going to take more that type of approach towards this game, because like, I want to buy Disney calls. I want to buy more of them. It's so damn expensive now. But like, maybe I don't care anymore. Maybe I just look at making sure that I care obviously, but maybe I should just look at it as like, okay, just make her 70% is bullish, and just go in for it. I mean, Disney went up a lot, but it's still way below its all-time high. So it's like, maybe just get more, but just maintain that so that like when really it's the fat, 20% of your puts will at least buffer, and you have 10% cash. But for the rest of it, like, just go big while the time is right. So that's what I'm thinking. See, anyway, over to you, Z. Let's see.
All right.
Cheers.
So I looked at the stocks this morning. Obviously, I looked last night. I think it's going to be a red day for me, somewhat significantly. I think that I'm at around $980. I think I've dipped below $1,000 again.
Did you buy puts? Why did it go down?
A couple things. When I looked at what I had last night, I had these Wells Fargo puts, and those almost went to zero in a way. I mean, they lost like 80% of value yesterday. And as it was going that direction, I also bought one more put on Wells Fargo.
All right.
I also saw Disney shoot up $9, which is like 8%, up to $119. And I was like, this is way too expensive right now. They got some news that they're going to reopen one of the parks, hence the big shoot up. And so I bought a put on Disney at $119 yesterday. This one I think has done well. I bought a $112 put. And so I think I gained a little money there. But Walmart went up a little bit. Starbucks kind of dipped a bit, didn't really do much. So maybe I'm still above 1,000 if I'm lucky. I think maybe in that case, maybe I'm at the maybe 1,050 mark. Let me revise and say I'm at 1,050. But I also hold some money in SPXS, which is the reverse ETF. And I think I've lost $20 there last night. Let's take a look. I was still above $1,000 when I went to sleep. So I hope that kind of maintained. Whoa, still above 1,000. I'm at $1,037. Not quite as bad as I thought it could be, but I am down on most of my positions. Let me send you a quick screenshot.
That's a really crazy thing. I started looking at it recently. I just started thinking about it. Marriott went up 17% yesterday. TripAdvisor went up 21% yesterday.
Wow.
Travel stocks are rebounding.
Yeah, should have anticipated this as well, right? Like as soon as the economy opens up, travel stocks will suddenly do well. I was thinking about this yesterday as well. Here you go. I actually made quite a bit of moves yesterday. So maybe we go over that first.
You did a lot of moves. Yeah, okay. Okay, so
yesterday, the first thing I did was buy this $112 Disney put because I saw the price was at $119, which I thought was way too much. So I bought that. I bought that for $80. The crappy thing is it looks like I bought it at the most expensive time where volatility was the highest. And so even though Disney has come back down to like 116, my put has actually lost value. I lost $8.
Right.
So that's kind of crazy. So what I also did was I bought another Wells Fargo put because I saw that it had jumped up as well. And I sold my Starbucks call, $90 Starbucks call for $6.19. The reason I did this is I saw that Starbucks is inching up. It's around the $76, $77 price range over the last week. And even though the stock is inching up, the put is losing value slowly because of time decay. Like the theta time decay is killing my position here. Whereas my $85 call is doing really well, but this $90 call is doing badly. And so the $85 call might actually get into the money, and so I decided to just keep the $85 call instead of the $90 call. And then I also sold this Walmart call because earnings is coming up. And I didn't want to hold both of them through earnings. I saw that it bumped up in price a little bit yesterday. I wasn't confident that it was going to continue to rise at the end of the day. So I decided to sell it then and just keep one. The current value, I think I did pretty well because the current value on the other one I still hold is 220. But I sold this one for 240 yesterday morning. So all in all, I made some okay moves. I'm kind of regretting this Disney put that I did out of impulse because the volatility was so high when it happened. I just overpaid for it. And this is a really interesting lesson to learn in options as well, is that after these huge price moves, the price of options is going to be so much more. And I knew that kind of, but I didn't really think about it when I bought this put. That even though the price now of Disney has moved down $3 in my favor, I don't reap any of those benefits. In fact, I lose because it jumped up, the volatility had increased by, let's say, 100%. And then it stabilizes and volatility comes back down to 50%. And suddenly those, like the market for those calls like shrinks up and then the price stabilizes. Yeah. So I really bought at the wrong time. Really good lesson.
Well, you know, the thing about you is that you really play, like you're way more risky than I am, because you're buying all these options with like 3-4 days left.
Yeah.
I mean, that's how you make a killing, but amazing. I mean, it's...
Well, they're also relatively cheap.
Yeah, you're giving yourself very little margin for error.
Yeah. And the reason I'm buying these is, well, they're relatively cheap. The payoff could be big. And yeah. I feel there should be quick corrections in the market. Yeah. Like after a big swing up, there should be like some profit taking and a little bit of a swing down. So I'm actually planning to sell these today.
You think today's going to be red?
I think there will be profit taking today. I don't know if it'll be red. I just think probably in the morning it will adjust. Then again, I don't know. I really don't. I don't think that SPY will jump up to like the $300 yet. I think it's going to now hover around this like 295 range. But we will see. It seems like there's now a huge amount of positive sentiment in the market, and it's pretty much just calls all the way for now. Like the bulls have it now. There's nowhere else for it to go for over the next week.
Yeah, we'll see. I mean, I need to pay attention to this sort of like whatchamacallit, like the 70-20-10 allocation, but I actually want to buy. I don't think I have enough put, so I'm going to buy a SPY put today probably. And the two companies that I'm very keen on are just discussion real quick.
Yeah.
One thing I find very interesting is that Activision Blizzard, like arguably the best video game company out there, dropped nearly 1.4% yesterday. And it's interesting. I guess like people are assuming that like it's a coronavirus stock.
Yeah.
And that as the world opens up more, people are going to be playing video games less and less.
That's really fascinating. Yeah.
Yeah, I just thought that was interesting. Anyway, the two companies that I'm looking very closely at right now are just three. In fact, I think that to make my life easier, I may just play three companies for the immediate future. Just Disney. I'm looking at Microsoft and space. Again, just space. I think there's so much like room for it to explode and go down or whatever. But Microsoft is very interesting because I just recently deleted Dota after spending like 3 weeks playing it nonstop, and I think Microsoft is actually one of the biggest video game companies out there with the most potential. Yeah. Because not only do they have Xbox, but they currently have this thing called Game Pass, which is like arguably the best Netflix of gaming. Yeah. All the games are accessible there for like $10 a month. Other people have it, but it's just been really well reviewed. And apparently, like they're trying to create this thing called cross-compatibility. So you have an old Xbox, a new Xbox, you can all play the same games, kind of. And so they're just trying to get into the services of video games as well, in a big way, as opposed to just the just like making the game and selling it. So I think Microsoft's got big potential. I mean, those are the stocks that I'm looking at.
Makes a lot of sense, and I've been doing a very similar thing, a very similar thinking, that I need to narrow down the stocks that I really follow and understand well. At the very beginning of this challenge, I was willing to put money on anything for any reason whatsoever, and now I'm actually doing a bit of research and understanding the company, where it's at, the sentiment in the market, and just kind of understanding like what kind of range it could trade in and where it could potentially go. And that's been really helpful to make better decisions. Like, I don't know what the price of Activision Blizzard should be right now. Literally no idea. Like, what's its history? Like, what's it been through recently? No idea. But I do know Starbucks. I do know Walmart. I do know Disney. I know Tesla. Like, these are some of the ones that I followed, and I can immediately say, oh, Disney at 119. Wow, that's really high based upon the last couple of weeks. Amazing, So knowing that.
Yeah, write it down. Just like master one or two stocks and just keep writing it up and down, up and down.
Exactly.
Up and down.
Yeah. I think it's really an interesting strategy. And I think naturally it's one that it makes total sense, and we should gravitate in that direction. Instead of just like, otherwise it's like you're walking up to a blackjack table, never played blackjack before, and you're betting on whatever hand you just feel is good. And that's what we're doing with stocks a lot of the time. Now we know how to play the game a little bit, and I think we'll be better players because of it. So I hope our 100K is in the future.
Oh, we're talking about we still have 40 days left to turn it into 100K.
Easy. Definitely don't need that much time.
Definitely. We can do it in 1 week. So anyway, yeah, man. I guess the most immediate thing that we're going to look at is Walmart. Earnings come out very soon, don't they?
Yes. They come out tomorrow. I don't know if they're before market or after market, do you know? Google says before market open. So